A very good afternoon, guys. After completing banking, now we take the next chapter of financial accounting paper 6, that is accounting of general insurance company. Accounting of general insurance company. Now all of you all know what do you mean by insurance. Insurance is nothing but it is a policy which is taken out by people to reduce their risk. Now when I say insurance, there are different types of insurance. Two major classification of insurance. One is life insurance and the other is general insurance. One is life insurance, other is general insurance. Now when I say life means the insurance policy or the insurance cover taken on human beings. We take out insurance policy for our own self or for our family members. That is called as life insurance. Second is general insurance. When I say general insurance means insurance policies other than life. Most of us have a Mediclaim policy. Why we take out Mediclaim, that is healthcare policy? If some injury takes place or if there is some disease and the person is hospitalized, so whatever are the expenses incurred of the hospital, that is reimbursed by the insurance company. Okay, so Mediclaim, we have vehicles, vehicle insurance, businesses may fire takes place, fire insurance, then where the business may goods are transferred or transported via ship, there is marine insurance. So these type of insurances are called as general insurance. So two main categories. One is life, that is on human beings, ourselves or our family members. Second, general, which includes fire insurance, marine insurance, health or medical insurance, vehicle insurance, etc. Now, if you see the name of the chapter, accounting of general insurance company, in your syllabus, life insurance accounts is not there. Accounts of life insurance company is not there in your syllabus. It is restricted to general only. Now I give you the examples. What you basically have in your syllabus is fire insurance, marine insurance and others. Others matlab what is not fire and marine, in that case it will be other. Now listen, doesn't make a difference whichever is the category of insurance. Format of accounts and everything is same. There's one minor difference that I will tell you when the right time comes. Okay, now listen, let it be general insurance, let it be life insurance. As I told you the meaning of insurance, we take out policies to reduce our risk. Life, to reduce life risk, life insurance, reduce health risk, medical insurance, vehicle risk, vehicle insurance. These are the examples. Now listen, we are taking out the policy. An insurance company who is going to take care of our risk, they are going to get some money from us, because if I take out an insurance policy, I won't be given policy unless and until I pay some amount to them. That amount for insurance company which we pay every year, you have heard this name since FIJC, is called as insurance premium. So keep this in mind. When we pay insurance premium, then only insurance company will give us insurance policy. So the major source of revenue for insurance company is premium. Like how when we sell goods, the major source of revenue is sale of goods. Same way for insurance company, the major source of revenue is premium. Now, we will give premium to them. For them it is an income, for us it is an expense. Now, we are not fools to take out a policy like that. We expect something from the insurance company in case that risk occurs. So what will happen? Say for example, you have taken out a fire insurance policy. you have taken out a policy for 10 lakh rupees. Every year you are paying premium which the insurance company is getting from you. Now say after 2-3 years a fire takes place in your factory or office. You have a policy of 10 lakhs. So insurance company will reimburse your loss to the extent of 10 lakhs. In FI you all have done the chapter fire insurance claim. Okay. Insurance company will reimburse your loss up to rupees 10 lakh. When I say up to, matlab either 10 lakhs or the actual loss, whichever is lower. Say for example your loss is 5 lakh rupees. So insurance people will do all the survey. If they find that everything is fine, they will give you a claim of 5 lakh rupees. So what happened? Because you had an insurance policy, you could save that 5 lakh rupees. Well, I've done right from FIJC, insure goods destroyed by fire. There's always an insurance claim. So that is the claim which we get from the insurance company. So why I'm explaining this? Premium is a major revenue for insurance company, and when they make the payment of claims becomes major expense. So premium is a major revenue for insurance company and claim is a major expenses. Apart from these two, still there will be few expenses and income, but these two are major. Another major expenses. All big companies are into insurance business. Now, they are not going to home to ask people to take out policy. All of them have agents. Even when we take out a policy, normally it is through an agent only. So what happens? Agent works on behalf of the company. They will come to us. We give them a policy. We don't have to pay anything to the agent. The commission will be paid by the companies to the agent. So 90% of the policy, I'm talking on the lower side, it will be more only, are taken out through agents only. So these insurance company will also pay commission to the agents. So major source of revenue premium and major expenses claims and commission. There are other expenses, but these are the major things. Got it? So this is the basic of insurance concept. Now coming to accounts. Of course, in this session we are not doing anything connected to accounts, but I'll tell you what you have to do. There will be 3 things which you have to prepare. 3 things but the maximum, not in every sum. First, every insurance company, general insurance company, will make a revenue account. Revenue account means that account which shows the details of income and expenses only for that particular business. Now say for example, there's an ex-insurance company. They are into fire insurance and marine insurance both. So what will happen? They will have to make a revenue account business wise. That means category wise. There will be a separate revenue account for fire business. There will be a separate revenue account for marine business. If they are into fire, marine, mediclaim and vehicle, or 4 categories, then there will be 4 revenue accounts. So revenue account is made category wise, business wise. Every company will have a separate revenue account for separate class of business. Getting it now? If you are into fire, marine and vehicle, there will be separate revenue for fire, separate revenue for vehicle and separate revenue for marine. So one is revenue account. Second, profit and loss account. Now profit and loss account is common for the entire company. No company will have 2 P&L account. There is one standard P&L. Revenue account will be business wise. P&L general for the company as a whole. And the third thing you are studying since FIJC, balance sheet. How we did in banking, same way there's a format of insurance. So when it comes to accounts, 3 major things: revenue account, profit and loss account and balance sheet. Now, one good thing is that it is not necessary that all 3 will be asked in each sum. Many times sums have come where you just have to prepare revenue account. Sums have come where you just have to prepare revenue P&L. And sums have also come where you have to prepare everything revenue, P&L and balance sheet. Over the next few days, we will be covering everything. Exam mein, we have to do whatever they ask. They have asked sums only on revenue, they have asked sums only revenue, P&L, and they have asked full-fledged final account sum also revenue, P&L and balance sheet. In fact, in insurance, 3 to 4 times, more than 4 times, full-fledged sum has come, as again banking, where it was asked till now only once. Okay, now as I told you, in this session I am just giving you explanation. After that I will take first sum. Even in that sum you don't have to prepare any accounts, because when we make accounts there are certain working notes to be made. So first will be a basic sum where there will be more number of working notes which will make our base strong. Okay, continuing with the explanation part. After accounts, I explain you the concept of premium, claims and commission. Now understand this very carefully, not only important from objective point of view but also from sums point of view. Insurance business is a very risky business. Insurance business is a very risky business. You have to think 10 times before you get into insurance business, because what will happen now? Claims will be very high. Recently everybody has gone through that situation of COVID. Most of the hospitals were full. So what happens? More and more patients were admitted. So those who have Mediclaim, everybody will come out with claims. So insurance company has to disburse a huge amount of claim. So in such cases, they can go into losses. So now what happens? If the insurance company feels that the risk is high, if the insurance company feels the risk is high, they will not stop the business. Nobody is a fool. If customer comes, everybody will accept the customer. But you have your own limitation. Now say for example, you have decided that during the year, I can take a risk only of 50 crore rupees. More than 50 crore ka risk I cannot take. Already that risk amount 50 crore is taken care of. Now you know I cannot take additional risk, and you get new policies. So what insurance company do? Understand this. There is a concept which is called as reinsurance. There is a concept which is called as reinsurance. What do you mean by reinsurance? Reinsurance means passing the risk, passing the business to another company. I know my risk capacity is done. I cannot take any other risk. Now, if a policy holder comes, if I am going to get a new policy, I will take it. But I will transfer it to another insurance company. That is called as reinsurance. Reinsurance means passing your business to another company. Got it? Now listen. What I explained you before coming to reinsurance, that is called as direct business. Direct business means what? You are ready to take the full risk. You don't pass your business to anybody. You are ready to take the full risk. You don't pass your business to anybody. Whatever the risk, you are ready to take it. That is called as direct business. That is called as direct business. And when you pass the business, that is called as reinsurance. So the example what I gave you, you are ready to take risk up to 50 crore. So that's your direct business. In addition to that, you pass it on. That becomes reinsurance. Got it? Now guys, listen further. Again, I'll repeat before I explain the next point. Reinsurance means passing the business, passing the risk to another insurance company. Now, reinsurance will be further classified in two categories. One is reinsurance accepted, and second is reinsurance ceded. Reinsurance accepted, reinsurance ceded. Now listen, this is direct business, what I have done. Accepted and ceded. How I told you that we transfer our risk to somebody else. Similarly, we are not full with our capacity. Someone else is full with their risk taking capacity, so they will transfer their business to us. So when somebody transfers their business to us, understand this, we are accepting. So that becomes reinsurance accepted. So reinsurance accepted means somebody else ka risk capacity is done, they are transferring the risk to me, so I am taking the business. That is reinsurance accepted. And the example what I gave you some time back, my risk capacity is done, I transfer the business to somebody else, that is called as ceded. So reinsurance accepted means someone else has transferred their business to me. Ceded, I have transferred my excess business to someone else. Because to do the sums, you should know what is reinsurance accepted, and what is reinsurance ceded. Now listen guys, everything is given in the theory what I have given you, but still I will explain you. Direct business, what I told you, premium will be income, claim and commission will be expense. Same thing will happen for reinsurance accepted. Same thing will happen for reinsurance accepted. Premium will be an income, claim and commission will be expense. But when it comes to ceded may the things will change. Premium here was an income, there it will be an expense. Why? I will take from the policy holder, and part of the premium I'll have to transfer, because when I am transferring the business, I am transferring the risk also. So I have to transfer the premium also, maybe not full. There's a percentage, say for example it's worked out as 60-40. So whatever premium I get, 40% I will keep, 60% I'll have to pay. So premium becomes an expense and claim and commission become an income for ceded. And listen, important for objective as well as sums. Sometimes in the question they just give you reinsurance. Nothing is mentioned accepted or ceded. So if nothing is mentioned, it will be always assumed to be ceded. Because anyway you are doing your own business, so this reinsurance will be that which you have transferred. So if the question just says reinsurance and they have not mentioned accepted or ceded, then in that case it will be assumed to be ceded. Alright? Understand this base? It is given in the theory. Now coming to the last part of explanation, after which we will get into the sums. You all have done banking, correct? Banking mein, whatever is the profit for the year, banking mein, whatever is the profit for the year, 25% of that profit is transferred to statutory reserve, or whatever question mentions. Nothing mentioned 25. That is a statutory reserve. Why? Because it is compulsory. Same way here, there is something to be provided in case of insurance company. Now insurance company mein, the provision ka percentage is higher because the risk is more. Banks also have risk, but bank will not give you loans without security, so their risk is minimum. But here the risk is very high. So here there is something called as unexpired risk reserve. You have to create a reserve which is called as unexpired risk reserve. Now I have given you a short note. Understand this. If you just understand, you don't have to read also. Encash it, I'm telling you why. Right from the year when BAFA started till now, 85 to 90% times, say for example there are 20 attempts of BAF till now, out of 20, 16 to 17 times they have asked a short note on unexpired risk reserve or a short question. It's a very, very commonly asked question. Write short note on unexpired risk reserve or explain unexpired risk reserve. Now listen, what do you mean by that? This has to be a specific percentage. This has to be a specific percentage. but percentage of what? What was in statute reserve of banking? 25% of current year's profit. This will be percentage of net premium. This will be percentage of net premium. And what do you mean by net premium? Net premium is the total premium, understand this, which includes premium on direct business plus premium on reinsurance accepted minus premium on reinsurance ceded. I'll repeat, net premium will include premium on direct business plus premium on reinsurance accepted minus premium on reinsurance ceded. First, you'll have to get the net premium. After calculating the net premium, you have to make a provision of unexpired risk reserve. Now listen, what is the provision? Provision is that there are two percentages to be remembered. Now as I told you, general may I give the example, fire marine. Now when I say marine, that means sea related, where the risk is very high. So if you are into marine business, then the percentage of provision is 100% of net premium. Remember, it is just a reserve. You are not using it. You are just keeping aside a provision to reimburse the claims. So in case of marine, it is 100%. And in case of other than marine, let it be fire, anything else, in that case, the percentage is 50. So two slabs, 100% for marine business and 50% for others. 100% or 50% of what? Net premium. And net premium means, again I repeat, premium on direct business plus premium on reinsurance accepted minus premium on reinsurance ceded. Clear guys? So this was the concept. How to calculate this percentage? That we will see when the relevant sum comes. Clear guys? So in every sum of insurance, when we are doing sum on revenue account or P&L or balance sheet, mostly you have to do the calculate revenue only. So wherever we are making revenue account, provision for unexpired risk reserve has to be made whether question says or no. How we did? Banking may, when you make profit, 25% of the profit goes to statutory reserve whether the question mentions or no. Same way, you have to take 100% of net premium of marine and 50% of others and create unexpired risk reserve. How to do that we will see when we come to the relevant sum. And again I am repeating, small theories there in the theory what I have given you all. Unexpired risk reserve, same thing what I explained you. And when we do the sum now, you don't have to read it also, you can write it in your own words. 85 to 90% of the time it has come. Almost every it has come. Write short note on unexpired risk reserve or a short question of 7 or 8 marks on that. Okay guys, so this was basic gist of what is insurance business, what is general insurance, what is premium, claim, commission, what is direct business, what is reinsurance, and in that what is reinsurance accepted and ceded. Okay, so this is the theory part. Now we'll take the sums and I'll take a first basic sum. Let me check whether I can continue in this video or not.